Well, good afternoon. This is Nathan Shipley with NPD. Thanks again for being with us this afternoon for our year-end webinar. I'm going to go ahead and get started. I know some folks are still joining, but we're going to go ahead and get the show on the road. So again, thanks for joining us today. A couple of housekeeping items before we get into the content of the presentation. I expect this presentation will take about 35 minutes. I know we have an hour on the calendar, but I'm hoping to take about 35 minutes of your day. We will not be doing questions and answers at the end. There's a number of people on this call, so to keep it manageable, we're not going to do Q&A. But I do encourage you, if you have questions, please send an email directly to me or to your account representative, and we'd be more than happy to address them once the presentation is over. And the source of the majority of the information today comes from NPD's retail tracking service, and it's data through year-end 2015, which is 52 weeks ending January 2nd, 2016. Unless I noted it otherwise. So again, it's 2015, the full year versus prior. So the objectives of our presentation today are a couple of things. One, we want to review the macro trends that impacted how our channel performed in 2015, and also take a look at what might come of the next 12 months and why we think that might be. And our goal is that you walk away from this discussion or presentation with a better understanding of what's happening in the marketplace as it relates to your business. I know a lot of you look at just one or two categories, so I'm hoping that this presentation gives you a better sense of how you're performing against all categories that NPD tracks in the automotive space. So before we get into the meat of the presentation, I thought we would talk through a couple of themes that we saw in 2015 that had an influence on how the aftermarket performed. The first theme that we will talk about is the number of miles driven, and we'll get into the kind of the numbers behind the theme. But miles driven increased a decent amount in 2015, as has been the trend for the last few years, and this has a positive impact on aftermarket performance, which we will talk about in detail later in the presentation. The second theme is pricing of products in the marketplace. It seems that pricing continues to trickle up. Whether that's price increases, promotion mix, the types of packaging on shelf, larger quantities, that type of thing. But pricing overall has continued to trickle up, which helps the top line in terms of growth in revenue. The weather is a major factor in aftermarket performance. Hot, cold, rain, etc., which we'll talk through different months and how the weather impacted those months specifically, but weather had a significant impact on 2015 performance. And then the fourth theme that we'll talk about today is how new and used car sales impact the performance of the channel. New car sales have been in the press quite a bit lately, especially. We hit a record number of new car sales in 2015. But the story there also lies for us in the aftermarket that used car sales are more than double what new car sales are, which continues to provide opportunities to sell products to consumers who are buying used cars today. So how did the channel perform in 2015? So a couple of things about methodology real quick for those of you that don't know. When I'm talking about the automotive channel, I'm talking about our retail tracking service that looks at just retail front-of-store categories only. So we're not tracking commercial volume, and we're not tracking hard parts. So things like starters and alternators are things we do not track, but filters, chemicals, wiper blades, spark plugs, those types of categories are ones that we do track. So there are 29 categories in total that make up these numbers that you're looking at. And so the story for 2015 was that the channel grew just shy of 4% to $14.6 billion in sales. Now what's interesting to note is a couple of things. If you look back over the last 3 or 4 years, the growth rate has accelerated. So we're at 1.6% growth a couple of years ago. Last year, 2014, grew 2.6% over the year prior, and now we're at 3.9%. So the growth is accelerating on the dollars front. On the units or quarts front, this was the first year in a couple of years that we were positive. We ended the year up 1.7% in the number of actual units that moved off the shelf. And if you were to look back the last 2 years, you would see, it's not on the chart in front of you, but we've had negative 2% the last 2 years in terms of unit change. So the story we've been talking about the last couple of years is that dollars have continued to grow, but units have declined. And we believe pricing has a lot to do with that. But this year, both dollars and units ended positive, which is a great story for our channel. So when you break down that growth, and this is looking at the last couple of years, again, the 3.9% being the light blue bar where we ended 2015, we can break it down into three buckets, what we call super categories. The first super category, accessories and appearance, grew 5.2% last year. So what falls into that? As I told you already, there are 29 categories that we track, and we group those 29 into these three buckets. So categories such as appearance chemicals, interior accessories, tire and wheel accessories, air fresheners, those types of categories are what fall into this accessories and appearance bucket. The next grouping of categories, chemicals, additives, and fluids, didn't fare so well in 2015 compared to the other buckets, up 2.1%. So again, positive, not quite as strong as the overall total. Those are categories like motor oil, performance chemicals, antifreeze, and refrigerants. And one driver of this category, this super category as we call it, refrigerants, for example, 2015 was a very warm year, so it helped. But then antifreeze, the category didn't fare so well in 2015. Actually, antifreeze was the only category that declined in 2015, so that actually pulled down this overall number for this super category grouping. The third bucket, maintenance and repair, those were categories like batteries, wiper blades, filters, and lighting, up 4.9%. The largest category that falls into that bucket is batteries. Batteries had a good year last year in terms of growth, and it's actually the largest category that we track. So again, up 4.9% relative to the 3.9% in total that we saw happen in 2015. When we look at the historical trend, and this is comparing the light blue line is 2014 by month, and then the light yellow or orange line, depending on what your screen is showing you, is 2015. So the story for 2015, most of 2015, is that we trended ahead of 2014. A couple of things to point out. In March, you see quite a spike there, which that's an abnormal spike compared to prior years. And that's just an early spring. Consumers out there getting a jump on things like car care and car appearance and an early spring, and we'll talk in detail what drove that specifically. And then the abnormality here is late in the year in 2015, where November of 2015 was actually below November of 2014. And that really didn't have anything to do with how the most recent month performed, November of 2015. It was more what happened in November of 2014. If you'll recall, it seems so long ago now, but that particular month in 2014 had a pretty nasty winter storm that hit part of the country that really spiked sales up in November of 14 and actually drove the channel up 3.5% through year-to-date 2014. As I've already told you, the year for 2014 ended 2.5, 2.8, somewhere in there. But it was just a little bit abnormal for November to come in below 15 versus 14. When we break it down by the different census divisions, how 15 did versus 14, as I've already told you, we were up 3.9% for the year for the total U.S. And if you look, starting on the West Coast, cutting down through the South and up on the East Coast, the numbers actually are above that 3.9%. The Pacific was up 5.5, Mountain up 5.1, West South 4.1. It's interesting if you look kind of the northern part of the country, the northeast part of the country, West North Central didn't fare quite as well, only up 1.4% versus last year. And then the East North Central up just shy of 1%. So the takeaway here is all parts of the country were up versus prior year, but the parts of the country, especially kind of the middle part of the country, eastern part of the country, didn't do quite as well as the total U.S. as an aggregate. So when we look at the 52 weeks in 2015, this is starting January on the left of your screen all the way to December on the right of your screen. This is sales volume per week. It's interesting to call out a couple of things. One is you see the ramp up in volume really starting in early to mid-February. And the second thing to call out is the top 5 weeks in 2015. So the top 5 weeks in 15 all tended to fall around holidays or peak driving periods such as spring break. So the number one week that we saw in 2015 was the week leading up to Easter, week ending April 4th. The second largest week in sales was the week ending July 4th, or the week of July 4th. And then spring break were ranked 3 and 5. So around March 14th and March 21st is where we saw the third and fifth week. And right in the middle of those two was the President's Day week. So a couple of thoughts there. President's Day falls on a Monday. Are consumers, because they're off for that day, doing car care? Is it an opportunity to get out and do car care in anticipation of things like spring break and Easter coming up? Those kind of things. It's just interesting, again, to see that these 5 weeks all fall around holidays and spring break. Now, one question we often get is, how does this look in prior years? Is it the same type of trend in 14 versus 13, et cetera? So to answer that question, 2014, the weeks were similar, but not exactly the same. So we did see spring break do well in 2014. We did see July 4th and President's Day. But what was interesting about 2014, if you'll recall a couple of slides back, I showed you November 2014 had a big spike because of the weather. There were 2 weeks in November that were in the top 5 of all weeks tracked for the year because of that weather activity that took place in that month of the year. From a top 10 category standpoint, again, as I mentioned, batteries is the largest category that we track. North of $2 billion in sales, approaching $3 billion in sales in 2015, up almost 5%. Motor oil is the second largest category that we track, positive this year, just shy of 2.5%. And then the list goes down from there, you can see on your screen. So a couple of things to point out. This list of 10 categories, or top 10 categories, has been the same list going back 3 or 4 years, with the exception of one category, which is spark plugs. Spark plugs will occasionally come in and out of this list of top 10 in terms of size, but with holding spark plugs aside, these are the top 10 categories that have been this way for the last 3 or 4 years. The second thing I'd point out about this list, as I mentioned a couple of slides back, antifreeze was the only category that declined in 2015. It was down 2.5% versus 2014. And the biggest driver of that, it was a very warm year. Again, the second warmest year on record, right behind 2012. And so right along with that same story, if you look at the refrigerants category, the number 10 ranked category, that category grew north of 10% last year versus 2014. So a great year for refrigerants. So those are the top 10 categories that we track in terms of sales or their overall size. In fact, 75% of the volume comes from these 10 categories. But if we were to look at the top 5 categories in terms of growth, the list looks a little bit different. The largest growing category, the largest growth category we saw in 2015 was air fresheners. Follow that by refrigerants, then lighting, paint and coatings, and then tire and wheel accessories. So the numbers you see next to the category definitions are where those categories actually rank in size. So air fresheners is ranked number 16 out of 29. Refrigerants ranked 10th, etc. So what happened to cause air fresheners to grow, for example? Well, there's been some innovation that's taken place in that category. There's a segment of products called vent clip. It's just the way that the product attaches to the vehicle. And that particular segment within air fresheners has done very well and caused the category to be growing the way it is at 10.6% year over year and be the number 1 ranked category in terms of growth. We talked about how warm it was last year, so refrigerants grew 10.2%, the number 2 ranked category. Lighting, 8.9% increase. So a couple of things that drove that. I will talk to the weather. We had a couple of months that were very rainy, where lighting really drove sales volume or positive sales volume through our channel. That, coupled with things like the aging vehicle fleet that I will talk to as well, are helping that lighting category continue to grow. Paint and coatings, that growth, what we're seeing in that category is primarily driven by peelable coatings, the type of products that are somewhat new to our space, not particularly new, but have grown quite a bit in the enthusiast space, products that you can apply to your vehicle or to the wheels on your vehicle You can change the color of your car. It'll stay that way until you decide one day you no longer want it to be that color, and you can peel it right back off. So the segment, we call it peelable coatings, that has really done a number in terms of growth for paint and coatings in a category that otherwise is positive but not significantly growing year over year. Then the fifth category, driven by weather, tire and wheel accessories. There's one segment underneath that is helping drive that along, and that is tire chains. So parts of the country that are icy or snowy that you need tire chains, that is what's driving that there. Us being down here in Houston, I don't think I've ever even seen what tire chains look like. But parts of the country, they're very important, I know. So understanding that and what categories grew in 2015, the top 10 brands that we saw in 2015 were very similar to the ones that we saw in 2014. Private label being the largest, quote, brand as an aggregate. As you know, we don't report individual private label numbers based on the retailers that we're tracking. But as an aggregate, private label makes up about a quarter of the market across all categories that we track, and it remains the number one brand, followed by Sylvania, Castrol, etc. So, brands like Prestone that span multiple categories, their sales for that particular product or particular brand would be across all categories that the brand participates in, and same can be said for a number of brands that are in front of you on this list. And then from a top item standpoint, Seafoam's additive was the number one item sold in 2015, and that was the same story that we saw in 2014. It's a multi-system additive product. Their price actually was down a little over 5% year over year, but again, the number one item both 2014 and 2015. And then from there, as you look down the list, there's a mixed bag of chemicals, antifreeze, those types of products that fall in the top 10. You see recharging kits, AC Pro recharging kit, again being a warm year, that item fared well, up to number 6 in terms of rank. We've got a Lucas fuel system cleaner product on the list as well. A couple of motor oil items there on the list, rounding out the top 10. So a mixed bag of items from a top 10 item standpoint. So now that you know what happened in 2015 from a percent change standpoint, who grew, etc., let's take a look at a couple of the things that we think influenced the growth in 2015. So the first one is miles driven. So we can look to NPD Civic Science service, and if you're not familiar with Civic Science, I'm sure many of you have been on a website, whether it be a news website or any type of other website, where you see a poll pop up, and that poll asks you a simple question. That simple question could be something like, how concerned are you right now about gas and energy prices? And you can click on on your choice of answer, and then typically the poll will show you the results right away. And so one of the poll questions that's out there is what I just cited. How concerned are you about gas and energy prices? And if you look at this chart, on the far right is the most recent responses that we have through January 20th of this year. So when you aggregate those, the red line shows us that most recently 25% of consumers told us they aren't concerned at all about gasoline prices. Where if you were to go back about 2 years, it was north of 60% of consumers telling us that they were very concerned about gasoline prices. So with that said, consumers not being concerned at all, or 25% of them telling us they're not concerned at all about gasoline prices, that has really helped the number of miles driven taking place in our country each year. So we have data through October of 2015, and if you look at the ramp up starting in mid-2014 up through current, there's been significant growth in the annual number of miles driven versus a time period around, let's say, 2007, 2008, when we were going into a recession. And you see kind of a dip there, and the miles driven stayed pretty low. We had a recessionary time, pretty high gas prices, pushing $4 a gallon, or in some places exceeding $4 per gallon. But gas prices have come down quite a bit, and in 2015 have come down significantly. I believe I paid $1.52 a gallon this morning when I filled up, so it's a great thing for the automotive aftermarket. Being here in Houston, the oil and gas industry, it's not such a great thing for the oil and gas industry, as layoffs continue to be the top of the headlines in this part of the country. But again, for the automotive aftermarket, Lower gas prices help drive consumers to drive more miles, which is a great thing for our space. And so what has that done? Well, if we look at the numbers, it relates to 89 billion more miles annually driven when we compare that to the pre-recession high of around October 2007. So it's a great story for our space. And so what has that done for spending? So we had about a 3.3% increase in gallon demand year over year. And so what that did with consumers is actually, because of low gas prices, consumers spent over $100 billion less at the pump in 2015 than they did in 2014. So that definitely helps. A couple of things. We're driving more, so we're maintaining our car more, doing things like oil changes more often. But that also, the lower gas prices are putting money in our pockets to spend somewhat on things like discretionary categories, appearance chemicals, and the like. But if you were to look at across all the industries that MPD tracks outside of automotive, discretionary categories, electronics, apparel, cosmetics, those types of things, we aren't seeing necessarily robust growth in discretionary type categories. And one theory that we have is, yes, consumers spent $112 billion less at the pump in 2015. And that, when you do the math, it comes to just shy of $1,000 per household. But healthcare costs, the increase in healthcare costs each year, especially in 2015, potentially eating up some of the savings we're seeing at the gas pump, especially depending on what type of income bracket you might fall in. That $1,000 savings per year on gasoline could easily be going straight to healthcare costs for you and your family. So that was miles driven. Pricing is the second theme that I spoke to. So what the chart in front of you is showing is the green line is 2015 and the blue line is 2014. It's just an aggregate average price of all 29 categories that we're tracking in the automotive aftermarket. So the theme here is that overall consumers are paying more for the same items that they purchased the year prior, and that theory holds true every single month with the exception of November. And I don't believe the story here really is what happened this November. It's more what happened last November from a product mix standpoint. November of 2014, again, big winter storm hit. Certain categories really spiked. So it was a mix in products, some more higher-priced products that drove the average price up for that month. And November 2015 is more of a normal month in terms of pricing goes in that particular time of the year. So prices overall were up, driving increased revenue for our space. And then the second part about pricing is if we look to 2014, we saw private label as an aggregate was up 6.3%, whereas the branded offering was only up 1.8%. So interesting to look at the shift in mix in terms of what's growing. Private label in 2015 up 4.6%, great story for private label, but brands up 3.7%. So branded products make up the majority of sales in the categories that we track. So if consumers are choosing for any number of reasons, whether it's they have more money in their pocket because of gasoline spending or just feeling better in general about their overall economic situation, branded products fared better in 2015, which also helped drive up prices overall, and then again driving revenue up. The third part of pricing that I'll speak to is the premium offering in our categories. Most categories that we track, the consumer-based categories, have some type of premium offering or premium choice that consumers can decide to purchase at the shelf. And so when we look at all the segments that we track, there's roughly 525 segments tracked across the 29 categories. We can sort it on growth and take a look at the premium segments that really helped drive growth across our space. And so when we look at the top 10 premium differentiated segments, we see things like full synthetic motor oil, beam wiper blades, high-performance oil filters, etc. And those 10 segments as an aggregate grew almost 12% year-to-date. So again, not getting into too much detail about premium products, but we do see premium segments growing and actually outpacing the overall channel. In fact, these 10 segments in aggregate grew 3 times what the overall channel did in 2015. And these 12 or 10 segments as an aggregate grew north of 200 million in 1 year. So again, as consumers are choosing more premium products, that also helps drive top-line sales growth throughout the year. The fourth influential theme that we identified as helping grow 2015 was the mix of new car sales and used car sales. So the chart in front of you is looking back 10 years at the number of vehicles sold per year, and these are new vehicles sold per year. So if you look in the middle of the chart, we all know the recession hit pretty hard, especially in the automotive industry for new car sales. So that was the dip in 2009. But each year since then, we've seen growth, a little north of 1 million to 2 million units per year additional sold compared to the prior year. So there's been a lot of talk in the press about new car sales, how great new car sales are doing year over year. In fact, 2015 was a record year for new car sales at 17.5 million. So, as we talk to a lot of our clients, new car sales, depending on what business you're in the automotive industry, new car sales, a lot of times new cars go back to the dealership for maintenance for a variety of reasons, whether consumers perceive they have to maintain their warranty, or the dealership offers free maintenance for a couple of years after purchasing the car. A lot of these new cars are going back to the dealership for service, which isn't necessarily good for the aftermarket today. Now, with that said, new car sales do generate a lot of trade-ins, which helps the used car park. And even though we sold 17.5 million cars or new cars in 2015, the story really is that there were more than double that number of used cars sold in 2015. And there were actually almost 40 million sold in 2015. And so when a used car changes hands, we believe there's an opportunity almost immediately for consumers or for us as an industry to talk to those consumers about what type of maintenance needs to be done to that used car that you just purchased for yourself, that you want to make sure it's being maintained from day one to last you a long time. So used car sales generate maintenance behavior, and they generate sales of products in our space. Interesting to note that based on a couple of sources that I looked at, both NADA and Edmunds, only 7% of used cars sold, I believe that's in 2014, were certified pre-owned, which those are typically cars that are less than 3 years old. But with that said, cars that aren't certified pre-owned hopefully are coming to the channels that we all play in and buying products for their cars for maintenance and repair. 6 million cars, as I mentioned, were sourced from trade-ins in 2014. So consumers out buying new cars are helping fuel the used car park, giving consumers that are looking for used cars more options from a shopping standpoint. And then in 2014, 80% of the vehicles sold, the used vehicles that were sold, were 3 years old or older. So again, those are typically cars that are off warranty, probably aren't part of any kind of dealership maintenance program. And so that's a great opportunity, again, for the aftermarket to go after those consumers that just purchased those used cars and try to help encourage maintenance behavior. And the last point I will mention about used cars is it's interesting to note that the millennials, the millennial age group, and that's defined as 18 to 34, are the group that's really driving up used car demand. And based on Edmunds' website, this age group comprised almost 40% of used car traffic on their website in 2014. Now, we're not going to talk too much about this particular age group on this session today, but the millennial age group is an age group that we feel is the future of the automotive aftermarket, and one that we should all be thinking about very strategically in terms of how we talk to them, how we encourage things like maintenance on vehicles, encourage DIY behavior, those type of things. But that's another topic for another day, but definitely worth noting. The fourth influential theme was the weather. 2015 was the second warmest year on record, and that was behind 2012. So the light blue line across the center of your screen is the average annual temperature going back to 1895. So it's interesting to look here in the last 10 to 12 years, the warmth relative to the average. And again, being a warm year, That definitely helps categories such as refrigerants, but then categories like antifreeze don't fare as well, down 2.5% versus a year prior. And then if we look at the percent change by week for the entire year, again, this is looking at an individual week versus how it did the year prior, you see a couple of things worth pointing out. In February, we had a late winter storm that hit in February of 2015 that really spiked sales quite a bit in that month, and we had 1 week that was up 15% versus the prior year. March, we had record warmth, an early spring, which we'll talk to a little bit detail in a couple of slides. And then kind of after the holidays, kind of summertime, there isn't really anything worth pointing out. It's kind of status quo through the summer. There was a tropical storm that hit in Florida late in the summer. It didn't really have an impact either way on the overall performance of the channel, but again, kind of status quo through the middle of the year. And then in November, as I've already mentioned, we had a very warm 2015 versus a cold 2014, which tanked a couple of weeks in that particular month. So a couple of months worth calling out. February, again, 23 states had one of their 10 coldest February temperatures on record that particular month. And so if we look at what happened to a category like batteries, batteries drove north of 75% of the growth that month, February 2015. And then other segments like gasoline antifreeze, non-fuel deicers, and diesel anti-gel, what drove categories like performance chemicals to grow. And in fact, those three segments alone accounted for 44% of the dollar volume growth in that category in February. Again, so extreme cold in February. Then came March of 2015, where it was unseasonably warm. We had an early spring, which drove consumers outside to maintain their cars or do kind of a kickoff spring car care, where categories like motor oil were up 7% versus the prior March, and quartz up 4%. And then things like appearance chemicals. This category was up 16% March 2015 versus prior. Same thing with air fresheners and appearance accessories. Double-digit growth. So an early spring really helped drive growth in a lot of our categories like appearance and air fresheners. And if you look at some of the weather forecasts for the next few months, depends on which sites you look at, but there is potential for an early spring this year as well. Kind of a warmer year. May was a very wet month, and so if you look at what happened in the West South Central, for example, in May, we had 2 weeks in May where the category was down versus the prior year. And in fact, wipers and lighting were the only categories that really drove growth in this particular division in May. Those two categories drove 90% of the positive growth versus the year prior. And so again, we picked out a couple of months. I've got two more to show you, but we've had a very cold month, a very warm month, and now a very wet month, all of which drove different categories to perform very well. November of 2015, again, very warm. This particular month was down 25% in antifreeze, but up 54% in refrigerants. So depending on which part of the industry you play in, it could have been a good or bad month for you. And then December of 2015, all categories grew in December versus a weak December 2014. Refrigerants was up almost 70% versus the year prior. And then, for example, motor oil was up in quart volume, mostly driven by full synthetic and high mileage, but it was the third month in a row where quart volume was positive. And if you look at a couple of the maps on your screen on the left, the top left being average temperatures for the month of December 2015. And if you look, the red is what we saw, record warmest temperatures for the month, and almost half the country had record warm temperatures for December. And then the graph below it is looking at precipitation in December 2015, where the darker states are where they had record rainfall. But even the kind of the more aqua shaded states saw much above average rainfall in December. So a wet December and a warm December helped a number of categories grow for that month. So a couple of more slides before we wrap it up. Looking to 2016. Each year our company does a forecast based on a number of different factors. We try to forecast out what we think will happen in the year. So what are the drivers of the forecast? The first one is miles driven, which a number of things play into the miles driven forecast, one of the biggest ones being gasoline prices, but there are also macroeconomic factors that go into it, things like unemployment that we factor in. The second big driver is pricing. As we talked to, pricing drove a lot of what we saw in terms of change in 2015. Pricing is a very big influential driver of the forecast for 2016. And the third big forecast driver is the consumer price index of new and used vehicles. What is it that consumers are paying for the cars that they're buying? And so again, macroeconomic trends, things like household income, kind of play into what a consumer is willing to pay for a new or a used car, which rolls up into our forecast. Historically, miles driven was the heaviest weighted driver in our forecast. But in 2016, we don't expect that miles driven will continue to grow quite as robust as it has been for the last 7 or 8 quarters. While we expect it to grow, we just don't think that the growth is sustainable like we've seen, and we do expect it to stay positive but level off. So with that said, the retail price becomes a much more important factor in our forecast. So given those three things, those are things that we have historical data on and things that we can also forecast based on what we know. There's a fourth factor that we've already spoken to, which is the weather, and that's something that we really can't work into our forecast. Extreme cold, extreme hot, extreme rain, those types of things which drive sales in a lot of our categories cannot be forecasted for in our model. We do know, depending on which part of the country you're in, we've got forecasts for the next 3 months for extreme cold, extreme hot. It's kind of all over the place, dichotomy, so to speak, but weather isn't in our forecast. So miles driven in 2014 was up 1.8%. Forecast for 2015, since we don't have the year-end numbers for miles driven yet, forecasted to grow at 3.3%. And as I said, we expect 2016 to be up 1.9%, so not quite as robust as 15, but still positive. So knowing that and all the other inputs, we're expecting the automotive aftermarket, again, just those 29 categories that I referenced early in the presentation, to grow 2.7% in 2016 over a growth of 3.9% in 15. And so that would put us over $15 billion in tracked sales for the year if that forecast holds true. So what did we talk about? A couple of things. One, both positive growth in dollars and units in 2015. So we had a couple of years there where dollars was growing but units was not. And we saw units positive this year, up 1.7%. The key drivers, the weather, miles driven, pricing, and car sales, all were major factors in what we saw happen in 2015. Gasoline demand was up, but consumers did save quite a bit at the pump. And while we did not see a lot of that savings necessarily going into automotive aftermarket categories, we do feel that a lot of that money saved at the pump was shifted over to things like healthcare for households in 2015. And then 2016, we're forecasting it to grow at 2.7%. A number of factors will influence that. The weather, again, having a big say in what happens in terms of 2016. So with that said, before we wrap it up, we did want to announce that we have a topical report that we'll be publishing in the coming weeks and months. Our Do-It-For-Me topical. Everything I've shown you up to this point has been on the DIY space. We didn't talk anything about the Do-It-For-Me side of the automotive aftermarket. So we talk to consumers about their purchase and shopping behaviors as it relates to the Do-It-For-Me business, and we will publish a report about our findings. And so if you have any interest in talking or learning more about that, please contact your account representative. And with that said, that's one topic that we're going to talk about for 2016. But if you have other ideas for us, burning topics, burning questions that you might have in your business that we could try to address for you, please let us know what those might be. So with that said, again, thank you for your time today. If you have any questions, feel free to reach out to me or your account representative. Thanks again. Have a good afternoon.